All right, y'all, back to work. Boy, choppy day today. Luckily, they'll find a beautiful retest trade early this afternoon, but it definitely feels like after 3 days and a big move higher, it certainly feels like buyers are running out of bullets right now. At this point, it's just a matter of time before they pull the rug up from underneath us and get that much needed correction right now. In fact, I see two chart patterns, one on the S&P, one on the NASDAQ, that are literally telling me exactly where the best entries will be to capitalize on that rug pull. So I want to cover my favorite strategy in tonight's video. I want to make sure we are mentally ready for a rug pull and make sure you know exactly where the levels will be, the entry tactics will be, so we can all make a killing on the inevitable rug pull we're going to get some point here this week. So charts are ready. Enough of the intro. As always, thank you so much for tuning in and supporting our channel. Let's go roll those sleeves up and get ready to make a fortune on that rug pull. S&P SPY ready to go tonight. NASDAQ triple Qs are all ready. I got 3 clues on the charts in front of me that are telling me where I think the winning trades are coming tomorrow. 2 out of those 3 clues is right here on these hourly time frames. 1 clue, it's very obvious. We're bullish overall on the S&P SPY. Bullish overall. NASDAQ triple Qs, I like to use these hourly charts as an overall directional filter so we know the buyers have all the control of momentum. That's the easy part. The second clue on the hourly time frames, I mentioned earlier, there are 2 very specific patterns right now. Look at the difference you're seeing right now. The S&P SPY sideways, the NASDAQ and the triple Qs are grinding higher in a channel. Those 2 patterns, they tell us exactly where the money's made on a rug pull. We're going to break that down in tonight's video because mentally and technically, I want to make sure we're all ready to make some money on that rug pull when it inevitably comes at some point here this week. The third clue though was over on the calendar for tomorrow. Tomorrow's a busy Thursday morning. We get a block of news coming out at 8:30 Eastern time. Jobs, PPI, retail sales, manufacturing, a ton of data coming out tomorrow, 8:30. And why not just toss in Jay Powell right on top of it? We get Jay Powell speaking at 8:40 Eastern time. Now, it's tough to tell if any of these are going to make a big difference. We know Jay Powell's not going to say anything tomorrow, right? He'll be kicking the can down the road. He's told us this many times already. And remember, this data, the retail sales, the PPI number, it's all kind of tainted now after that trade truce we saw, over the weekend, right? So it's tough to tell. If I had to guess right now, I would guess that tax bill that's making its way through Congress right now, I would expect the catalyst for a rug pull will probably be some delay as they try to work out the SALT deductions and all kinds of stuff going on right now with that tax bill right now. They need to get that tax bill to get this economy back on track because Jay Powell ain't doing anything right now until he sees more data and blah, 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 blah. So anyways, big block of news at 8:30. Jay Powell at 8:40 tomorrow. We'll definitely be looking forward to the announcements tomorrow, but I don't think those are going to be the big catalysts. I would guess that tax bill, though. That's the stuff everyone cares about right now. Back to our charts right now. It's a range on the S&P, a channel on the NASDAQ. They both tell us exactly where to make money on the rug pull. Let's start first right now over on the S&P. We're not going to trade off a time chart. Time charts are so much more difficult to time entries. I like to use tick charts. Tick charts are better for entry timing. That's a 7,000 tick chart, upper left-hand corner. And in case you're watching for the first time right now, that is the 21 EMA. It's the only indicator we use to find lots of winning trades each week. There's a big clue right now on this tick chart right now. It's basically 2 ranges. Big range we saw earlier there on the hourly, and a previous range. This is a really big clue because the most recent range is a magnet. The previous range is a breakout pullback. We know basically now that the rug pull will try to go lower and bounce right back up into that trading range. Again, the most recent range is a magnet. The previous range is a breakout pullback. So knowing that right now, it's very easy to plan how to capitalize on that rug pull. For example, I would love to get a nice sharp move down. And this is why I said earlier, mentally, a lot of this is mental because when this thing drops, it's going to feel like the end of the world is coming. The news media will tell you this time it's different. It's not different. We made this huge move the last couple days here. It needs to pull back eventually. I don't know what the catalyst will be on that, but I do know once the thing pulls back though, this will fool a lot of inexperienced traders. They're going to believe all the headlines. I will look to buy a bear trap down there. Get those bears trying once, get those bears trying twice. Remember, got to be a higher high. Trap those bears in twice. Now we know where their pain is. Now we know where their stops are. Now we know where sellers turn buyers, and I can buy right into those stop losses. Now remember, that range above us, it's a magnet. As we go back higher now, if you want to make a bunch of money, guys, add to your winning trades here. The way we add to winners is we look for this pattern: shallow pullback, higher high in price. Once we get that higher high in price, after that shallow pullback, bam, there's my add-on entry. I want to see a nice strong green candle closing above that 21 EMA. It's a bear trap and an add-on. Now, a lot of times we get a rug pull. All that momentum going lower, a lot of times we will get that bear trap and get a profitable trade on the way higher. But every once in a while, what happens is it holds the underbelly of that range and then make another leg going lower. Again, the mental aspect of this is very important. This is going to feel like a reversal, but screenshot this, bookmark this video. When they get back to retest that low now, think about it this way. Anybody who sells on that pullback right there, where's their profit targets? A good chunk of it comes off at that low. Sellers up here become buyers down here. Is this a good place to sell? You know we're bullish overall, big move up on the hourly. No, the answer is no. That's not a good place to sell. You want to sell, sell high. You're selling low right there, but I can almost guarantee you a ton of rookies will not watch my videos. They'll get trapped in this thing, and our job is to basically teach them a lesson. Bear traps once, bear traps twice. Again, 2 tries. I'm not trying to pick tops and bottoms. It may go a bit lower. All I know is once those bears commit off that 21 EMA, now I know where their stops are. Now I know where I can squeeze those stops. If you learn one thing in this video, retest trades. Retest trades are some of the easiest trades. I'll show you one we had earlier here today in a moment here, but retest trade, double bottom retest, again, bear trap and add-on, and you better leave that runner. Bear trap, add-on, it's a double bottom retest. It was a beautiful one this morning, well, late morning here this morning, right? Ran lower, up, retest trade, back up again. Run it lower, trap the bears in, squeeze back up again, and again, don't be surprised if it runs up, comes crashing back down. Buyers want to buy low, don't sell low, trap them in, and right back up again. Here's a very important question. We oftentimes don't get that bear trap down there. You know, every once in a while, there's so many buyers down there will run lower and just whoop right back up again. These can be tricky, right? Because you don't get any real good chance for a bear trap down there. If we V bottom off that low and I don't get the entry I want down there, I'm going to start watching for a new bull channel. These, again, think mindset. These will be tricky because that voice in your head, it will tell you chase after it. We don't want to buy high though. We want to buy low. To do that now, we do is mark a trend line off the high, bring that trend line down around that low. That finds a channel. Now here's the magic happens. Look left, find some prior swings. What I want is, I want to get in. This is where the money's made on these. I want to get the first test, the first pullback off that channel. We always say first test is the best test in our videos. And ideally, I'm going to get right in below that low. This entry right here, this could be any of the entry patterns you guys are learning in the free trading course. It could be a bear trap. It could be a 2-try failure. It could be an add-on pullback entry. You guys will learn those techniques in the free video course. In fact, that reminds me, why don't we slow down for a second because we've covered a lot so far. I know most guys watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this could be a brand new strategy for you. Don't you worry, I teach this entire system in my free trading course. In fact, I have a ton of examples, bear traps, add-ons, V bottoms, retest trades. Guys, I want to help you time better entries, get your confidence back, get your P&L back in the green again. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, hit that link that popped up there. Take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells me exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, make a lot more consistent profits. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, the markets are way too good right right now not to be banking profit. So hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. And again, it is 100% completely free for you. Also be aware too, I'm gonna put all the important links you'll need to learn this roadmap, learn the entries, time better entries, make a lot more money. I'll put all the links below the video tonight in the description. Most folks, they start making money all on their own, all from that free video course. So start there first. And don't forget too, if you're on Twitter or X as the kids call it these days, I post a ton of videos and charts and mindset stuff on Twitter. If you're on that platform, give me a follow. Again, all the details you'll need to learn the whole entire system and hopefully earn a lot more because of it. Link in the description of the YouTube video. Okay, now we've covered the rug pull. I love the rug pull. But by now, maybe you're wondering, what if I'm wrong? What if we go higher here? What if we don't get a rug pull? What if all we get is a small little pullback right now? Well, what's the problem? What is the problem with a small pullback? The problem is we're still buying pretty high. So let's talk about two variations in case we don't get the rug pull tomorrow, because I have no crystal ball. I'm just simply speculating that at some point next couple of days, they're going to pull that rug up underneath us. I'm going to make sure we are mentally and technically ready for it. If all I get is a shallow pullback, I need to avoid buying really high right now. And to do that, I'll make a small adjustment. In our trade room, we always say shallow pullback traps. What I'll do is wait for the bears to try once, try twice, and I want to get in underneath prior swings. It's very important that we understand risk reward. For example, if I make a big run going lower, I can take a small amount of risk down here, 1, 2, I can buy above that high and take a relatively small amount of risk for a much bigger oversized reward. I can be a lot more aggressive in those types of trades. If all I get though is a relatively shallow pullback, if all I get is below that low right there, I'm buying relatively high. And so to offset that poor risk reward ratio, we make a small adjustment. We still use 2 tries, so bears once, higher high, bears twice, but now I want to get in underneath that low, right? I don't want to buy above that high. I want to buy underneath that low. That aspect of trading, right? The bigger pullback, I can be more aggressive because of the risk reward ratio. A shallower pullback, I've got to be a little more cautious because again, I'm buying relatively high. I can't take a big enough reward to offset the risk on that trade. That's one variation I'm looking for tomorrow. Now, what if we go higher here? We heard a lot of good headlines today. China continues to de-escalate. We're hearing a lot of good stuff right now out of Trump's trip to the Middle East right now. So if we go higher, remember this range likes to rotate. So don't be surprised if we go higher overnight and we get kicked right back again. All right, so do whatever you want, but be very careful buying breakouts going higher here. The trick is that if we pop up and we start seeing separation off the moving average, the key is separation. If we pop up and separate, look over here, there's no separation, right? They're going higher, but look, there's no separation off that moving average. That's when you know we're starting to see signs of struggle. And obviously buyers kept trying, didn't get anywhere today, right? But if we pop up here, it'll pop up, it'll start to grind, and it won't pull back to the moving average, the 21 EMA. There's a reason why I only use one moving average. I don't want to have my judgment clouded by the 50, the 200, all these random moving averages. All I need is a 21 EMA. So once I get that separation, now we start looking for breakout pullbacks. And to do that, we now look left, we find some prior highs up here, and we now wait for that pullback. And I use the same basic idea, right? We wait for the price to pull back to that 21 EMA. I get that bear trap once, twice. I like 2 tries because I like to run stops. I think the easiest way to make consistent profits, indicators work every once in a while. Tape reading order flow works every once in a while. Divergence once in a while. It's just not consistent enough. I find that traps, running stops, are the most consistent way that I have found. That's why I use them, right? So 1 try, 2 try, trap them in, and then that way they're stops, right? Because if you're caught short, if you get stopped out of a short trade, you have to buy your way out. When you trap bears in, you squeeze their stops juice that move going higher here. And the big variable then is do we get to add on to our trade here? And again, a lot of examples there for add-ons in the free trading course. So higher high in price, shallow pullback, and we're in from there. Take off some of the highs there, and remember, the breakout leg is a measuring leg. So once we know how deep that pullback is, that will tell us now how big that final target will be. We'll take some off on a retest the high, and then leave that target for that runner going overhead, right? So in case we don't get the rug pull tomorrow, now you know it's the grinding move going higher. Very important, right? Very important. And then that will signal the breakout pullback. Look left, find some prior highs, bear trap, add on, targets, leave a runner, and you're good to go. That's the S&P. Those are the ranges on the S&P. But we now have a very different picture over on the NASDAQ. The NASDAQ, you'll see here, we're definitely still bullish. No doubt about that. No different there. But you can see here that channel. The channel is actually just as easy as the range. Before I dive into this though, if you're enjoying this video here right now, please help me grow this channel tonight by hitting that like button, and please make sure you subscribe. I know we're all busy people these days, and I appreciate you guys tuning in and watching my videos. So thank you guys so much for the likes, the shares, the subs, all the ongoing support down in the comment section below. Now that I'm done begging for likes and subs, let's go roll the sleeves up here now and grab a look at the tick chart. On the tick chart right now, it's a very obvious clue, right? It's a spike in channel. It's a big pop up, a spike up into a channel. Now, why are these a big clue? Well, if you're a student of mine, you know the answer to this one already. We see a lot of these in our trade room. When it comes to spike in channels, the key is the money is made below these swings. And the granddaddy of all the swings is the base of that channel. I can almost guarantee you all the buyers are sitting right below that 21,187. Think 21,200 here on the NASDAQ. So if you understand the basic principles of the spike in channel, again, find those swings, trade those swings, and you also understand the basic principle of a shallow pullback does not give you the ability to get a good risk reward ratio. A deeper pullback is better. Now think about how this all comes together. A shallow pullback, what's my concern? My concern is risk reward ratio. What do? It's a slight modification, right? It's bears once, higher high, bears twice. It needs to be a bear trap, right? Like over here, right? Higher high in price, trap below that low. Higher high in price, trap below that low. Shallow pullbacks, get in below prior swings, buy as low as you can. If we're lucky tomorrow, and again, I think we'll probably get some headlines out of that tax bill coming up, that will probably be what kind of initiates that rug pull, if you ask me, but it doesn't really matter what the cause is. If we're lucky, we'll get a nice sharp pullback. Now again, mental, right? Mental. Psychologically, this is going to feel like, oh no, no, it's not. It's not. We're way high up right now, right? Price has to pull back eventually to attract in more buyers. When it pulls back like this, as we say in our trade room, the best entries are the scary ones, right? They're always scary. They always feel uncomfortable. If they feel scary, you're doing it the right way. You really are. So as it rolls lower now think about this again. I can get a good risk reward on this entry. Now it's bears once, it's bears twice. I can take that classic bear trap off that low, and we know where the market wants to go. It wants to go right back up to take out that high. As it does it, promise me, guys, please don't just kick your feet up in the desk and bask in your P&L. Keep that foot on the gas pedal and keep on adding. Higher high in price. Remember, the key to this is the shallow pullback, right? That's always the key. The shallow pullback. It'll run up. It'll begin to separate. Like I said earlier, right? When it pops up and separates off that moving average, that's how you know the market's strong, right? When it's not like right now, no separation right now, no strength anymore. Okay, these are obvious signs that, again, might not be tomorrow, but I want to make sure I'm ready for that rug pull. Starting to seem like the buyers are running low on bullets right now. So shallow pullback, separation is the key here. Higher high in price. And again, get right below that low, nice strong green candle like I teach in the free course, and we're leaving that runner back up to retest the high. And remember, a lot of times in our trade room, we get that sharp pullback. we'll get that scary but profitable bear trap down there. It'll pop up. I always go for a 1-to-1, right? Like I teach in the free video course, right? So 1-to-1, stop to target, stop moves up to point of entry. It's again, risk is off, reward is locked in. It's a winning trade. But every once in a while, though, the strength of that move down, it's such a strong move, it will hold the underbelly there, and they'll make another run going lower. Anywhere underneath that low, anywhere under that low, it could be all the way down to that breakout pullback zone, 065 and change there. Again, anybody who sells right here, they're taking profit right here. Okay, that voice in your head is going to tell you, are you sure you want to buy this right now? Yes, that is exactly the right answer. Because again, when you feel that kind of anxious feeling, that scary feeling, again, we're not a bear market. We're bullish overall on the hourly with a huge move going higher. Once it retests that low, remember this video, right? It's not a reversal. It's a retest trade. It's not a reversal. It's a retest trade, right? It's a run down. It's a retest. Again, so 1 try, 2 try, bear trap them in, back up, add to our winner, and we keep rinse and repeat over and over again, right? We run lower, we pop up, it's a retest trade. Keep buying those retest trades. They happen all the time. Run lower, it's a retest trade, right? Buy it up. They run lower, it's a retest trade, right? Buy it right back up. And again, like I mentioned earlier, if we run lower but then whoop right back up again, these are obviously not our favorite because we want to get that bear trap down there. But I don't control the markets. My job is to be ready for this stuff and make lemonade with lemons we get. So if I V bottom off that low, this is the best way I know how to do it, right? I'm not going to chase after it. If you make your money chasing after moves, you'll eventually lose all that money chasing after moves, right? You live by the sword, you die by the sword. Make your money gambling, make your money buying high, you're gonna lose your money buying high, right? That's just the way it goes. That's why trading is so difficult. You can easily break your rules today and get rewarded by making money today. But do that same thing over a long period of time, you'll go broke over a long period of time, right? So we don't want to chase after it. That's not the way to trade. Mark off the high, mark off that low. Now, this is a trade that, nothing's guaranteed. Nothing's guaranteed, but that's about as close to a guaranteed winner you're ever going to get. Because now at this point, what happens is it begins to grind going higher. Right? That momentum shifts now back for the buyers. Momentum now starts to move higher here. Everybody who wanted that buy right there, their powder is still dry. Their bullets are still in the chamber right now, and they're not going to let that pullback go without whacking it going back higher again. And again, I can't teach everything in these videos, but that'll be a bear trap pattern, a 2-try failure pattern, a pullback add-on, maybe a strength move going higher. Again, if this is all brand new terminology right now, don't you worry. Take that free video course. The link's in the description. Take that free class. It will change the way you look at these markets. And if you're like any of my other 1,000 students over the years, you'll start making money with this stuff just like they do. All right, guys, that's the game plan. That's the game plan for tomorrow. So, and by the way, if we go higher here, if we keep going higher, same thing. Buy the shallow pullback traps. If we keep going higher, shallow pullback traps, rug pull bear traps. If we keep running higher here, I'm still waiting for get underneath these swings. That's usually where the money is made in a spike and channel pattern like this. All right, guys, fantastic week it's been. Will tomorrow give us our rug pull? Only time will tell, but that's the game plan for tomorrow. Now, speaking of tomorrow, guys, the place to be is in our trade room. These markets are wild right now. There's a lot to learn to be a successful trader. The best place to do this is do it with us every morning at the opening bell. I'm going to put all the important links for the free video classes, our trade room membership links. I'll put all that stuff for you guys. Take the free course first. Learn the roadmap, start making money all on your own, and hopefully I'll see you sometime soon trading with us every morning, 8 o'clock Eastern time in our trade room with all the SOT advanced members. Guys, in the meantime, guys, be well out there, be nice, be there, will ya, and be here next time. Adios, amigos. Bye for now.